Hello people, right, it's 5 o'clock Sunday evening and I thought I'd just make a little quick, I've just run through a few charts on these weeklies, and I wanted to talk about something that perhaps I don't mention enough, but I think is very, very significant, because it isn't just about breaking levels of support in order for the price to go down. It is important that we understand the levels of resistance. In my opinion, a level of resistance when you're moving down is far more important for you to break and close through than a level of support. If you break a level of support without breaking a level of resistance alongside it, I do mention it occasionally, I know I do, I did it in the previous video I think, then it is you need to be very aware that the resistance could still act as support if it's below you. Okay, so what we have here, and I'll show you what I mean by all the resistances in this particular swing here. So the most important resistance is the most recent resistance to your left hand side, so that's that candle there. And this is this is a valid resistance because it's part of a downtrend. High, low, lower, high, lower, low. And we can see how that has been respected just by looking at this lovely weekly chart here. Now I haven't cherry picked this, they all look similar, the pound currency pairs. But let's just have a look at what happened to this particular resistance level. The resistance is created in the down move because we have a high, a low, a lower high and a lower low. There. And these two are connected, and you hear me talk about this when I'm talking about swings. It's no different when we talk about candles, pure candles. So what's happened then is that resistance has been broken by this up move, and that in itself, a resistance once broken gets tested as support. How many times do I talk about that? So when you're up here, much the same as when we're down here, we're talking about the reversal, just to test it for fair value. How do we know that level there that caused the price to stop, in other words stop the buyers? How do we know that the sellers will come into the market at that point unless we go and test it? Old resistance acts as new support with the test, and that's just simply that's what happens. Now that was a massive trade there, we could have traded that. And that's why these weekly charts are so interesting. 145 pip move, give or take. 145 pips, guys. That's there screaming at us when that broke there. Okay, so and then they've tried to break it again, but the buyers won. They come down, they failed to close, and that's what happens. And this would have been tradable as well, because this would have been a series of confirmations to the downside, starting with the lowest time frame, 1 minute, 5 minute, 15 minute, 30 minute, hourly, and so on and so forth. And all that time they would have zigzagged, broken test, broken retest, all the way down. Masses of potential trades involved in that, because we understand what they are trying to do just by drawing a level on one candle there. Okay, at this point they've run out of sellers, and they've done the old move up, pull back, move up, pull back, move up, pull back in every time frame. So multiple possible trades there. And once again, on the lower time frames, we could have looked at it and it could have looked exactly the same as this, because that's what price action does. If you couldn't see this, you wouldn't know whether this was a 5 minute chart, a 1 hour chart, or whatever. Think about that a little bit. So here again, once again, they've pushed up, and they've broken a level of resistance here with this close here. That's clearly broken and closed above, and at some point it's crashed and pulled back and tested this old support. Again, we could have traded that, and once again the buyers have pulled back into the market and pushed the price up. At this point, at some point they tested this level once again, and it's held. How amazing is that? And then once again, when they've broken some levels over here and failed to close or whatever, they failed to close above that resistance there that's forced price down, and what happens, it continues up. Here, failure to break and close above a level again, and the price collapses. So, and notice how again, and that's the important point there, is this resistance level, this high of this weekly candle, was held as support again. They've failed to break and close behind it, but they've just at this point exhausted the buyers. I believe all it is massive institutions playing games. There's the retail money involved in the markets is insignificant compared to the trillions and trillions of pounds or dollars, whatever you want to call it, involved in these markets. We are cannon fodder, and to them it's just a game. Printing paper, unreal money, call it what you like. But believe me, I do believe this. It is totally and utterly manipulated, especially in the forex market. So we've come down, tested this level again, and it's failed to break. Finally, this resistance level has broken. And notice now also these support levels have broken. And these are now important because they represent the area that is potential to reverse to check this fair value area as a possible buying area. How do they know that this is the right price for that unless they go up and check whether there's any more buyers at this level? So do never assume that they're going to come back to there, because there's levels inside here that may well stop the price going any further up. It may just crash, who knows. That's why we use our reversals to enter trades safely, because they are basically working out the exhaustion points for you on the lower time frames, of course. You know, starting on the whatever you want, 15-minute, 5-minute. Don't trade those, but just watch them, because they are the start of your potential reversal on the higher time frames where you can actually make money with the gaps. Okay, so the obvious thing to do now is to go onto the lower time frame and look at that, but I'm mindful of the fact that I don't want this video to fail to save. For whatever reason, it doesn't save sometimes. But what we need to do before I finish is check the resistance levels to our left hand side, because if they haven't been broken by something on the way down, then they are still a problem. As it is, we can clearly see all of these resistance levels have been broken. This one by that candle there. All of these have been broken. So the important resistance levels are still on the left hand side. They're more important way left because they're part of a downtrend. These are part of an uptrend. They never broke a low. This broke this low, no. This broke this low, no. This broke this low, no, and so on and so forth. So they're not as important as this stuff over here. So this is what we need to look at. So basically there is nothing, because all of these are like a parent bar, if you like. So the first resistance in our way of this is something that hasn't been broken, so we can start low and go high, if you like. That's not been broken there, and when I say broken, I mean broken and closed. Nor's that, nor has that. That's held. So that is the significant level, and that's the potential target area for this coming down, because this resistance level has not been tested, or has not been broken, should I say, as old resistance acting as new support. So when that breaks and closes, expect another bounce and then a continuation. But that makes this the potential target for this. I hope that makes sense. So this could be an hourly chart, and you can still trade it in the same way. That's a shame that moved. Let's put it on there again. So that's how you look at old resistance potentially becoming a target. If it's been broken recently in this recent move by a close through, then it has given way potentially. So this one has been tested and busted. There's those bird scarers I talk about all the time, drive me insane. So I hope you heard them, there's 3 bangs in the background. All of these were broken by this move down, so they will just become bounce points for this potential move to the downside. Okay, so I don't want this to go on too long, but that's what we are talking about here by resistance is more important than support when you're on your journey downwards. So this low here, of course, signifies a reversal to the downside. Break of that, and we've got the low, high, high, low, high, 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 low, lower, high, lower, low, until we can sing the break and close. And then because remember also this isn't shallow, and remember also this is part of an uptrend, this could easily be a massive reversal point to the upside again, but not these ones. That's another reason we want to draw all these levels in carefully, because these have been broken. So be very careful if you consider using a broken resistance points as a reversal, and this, remember, could be an hourly chart, because they have, for that reason, they've been broken and closed through. So they will cause potentially a bounce up and then a continuation down to the ultimate new test point down here. Okay, I'm sorry to go on so long, and I hope this has been of some value to you. This could just as easily be a 1 minute chart as a weekly chart. Having said that, this break here could give us a bounce tomorrow morning. If it gaps up, then that's probably your bounce done and dusted, and they will close the gap and potentially continue down. But none of this is a indication for a trade. That's the disclaimer. Or learn how to do this stuff yourself, and you will reap the benefits. Always keep one eye on this as well. I forgot to say that. This isn't below the 20 by any means, so again suggesting potentially a pullback, but the lower time frames will discern that. Again, look at this. This is overstretched. That's begging for a pullback actually. But again, disclaimer, do your own research, do your own analysis. Interesting. Okay guys, thanks for watching, have a good evening.